Many people follow famous YouTubers trading strategies without thinking. But क्या ये strategies हर किसी के काम आती हैं? नहीं. The key is to understand the strategy and customize it according to your need. In this new segment, I'm going to break down these famous YouTubers' strategies, add my own insight, my own style, and then towards the end of the video, I will backtest this approach with over 10 to 15 trades. This will help you learn to trade smarter and not just copy. Make sure you have subscribed this channel and like this video. So first I'm going to watch this video, best news trading strategy by UMAR Punjabi, and then I will try to explain his strategy with my improvisation. So I have watched the whole video, quite interesting strategy. Now I'm going to improvise this strategy, and first let me explain this to you. Now according to him, his strategy works on gold, smaller time frames, and it's kind of intraday. Now we are going to improvise that strategy as per my style. So I'm a full-time swing trader in Indian stock markets. So I'm going to change that strategy towards stocks, higher time frame, and swing trading. There are 4 steps in his strategy. First, to create a bias. Bias means it could be a bullish or bearish bias. And we have to mark a zone. We need to wait for the retracement risk reward ratio. For example, the bias right now is bullish. That means the market is moving towards the upside. And then the most important part is creating a zone. Now we are not creating a random zone here. We are marking the area around the news candle. So let's say that this is the news candle. News candle can be green in color, red in color, or what is the form of that candle. We just have to see what's the high and the low of the candle. Around that area, we are going to create a zone. Around that area, we are going to create a zone, something like this. Now, the strategy will only be activated if the next move that is going to come after the news candle has been established and we have created the zone towards the same direction as our bias. So our bias was bullish and then the move comes towards the upside. But if the markets move towards the downside, that means they are going against the bias, then we are going to skip. Now our entry gets activated only when the same price action comes back to the retest areas and gives you a green candle. So we take a small stop loss just below the candle and we play for 1:2 risk reward ratio. That's our whole trade. This is an old stock chart right in front of you, November 2023. This is the earning day of this particular stock. Rather than going for the news candle here on the stock, first of all, I'm using the daily time frame. That's my improvisation, and I'm using the whole candle for the daily time frame. Whenever there is a earning, you have to go to that candle and mark the high and the low of that particular candle. Now that candle could be doji, marubozu, lower wick rejection hammer candle, shooting star, anything. It's high and low marked, and then you need to move that zone till inception. Now we see what's the bias. The initial bias was upside. That means the market was in a uptrend. Then comes the news candle, and after the news candle, 2 things can happen. Either the market will move up and close, or either the market will move towards the downside of the zone and close. If it is moving towards the downside, it's going against the bias and we will skip the trade. But if it is moving towards the upside and closing, then we are very much interested. Come back to that particular zone and give you a green candle right here. As per our logic, that will be our entry, and we'll keep a stop loss below the candle's low. We'll go for 1:2 risk reward ratio. That's how our trade will be placed. That will be our entry candle. So I hope you now understand his strategy and my improvisation of that strategy. Now let's backtest it on 10-15 setups so that you guys can get a good idea about how to watch YouTube videos like these and start improvising yourself, start improving. By the way, if you have not subscribed this channel, this is the time. Subscribe this channel right now for more such videos. That's the earning day. The stock gaps up, creates a red candle. Here you have to mark earnings candle. You have to see that's the earning candle. It was a gap up, and that's the low of the candle. We just have to create a zone there. Now we have to see the bias. The bias is lower low, lower high. That means it's a downtrending stock. So now if the market after this candle closes, if the market starts moving towards the upside on the daily time frame, we are going to skip it. But if the stock closes below, only then on a retracement basis, we can enter the strategy. If you see, the strategy gets activated here. Now we are waiting for the retest for a good risk reward ratio. The stock comes to this area, whole candle that's been engulfed. So kind of a good entry, I guess. That's a 3% risk here. And if we play for 1:2, that will look something like this. Let's see. You guys can see that's a target for us. Moving to the next one. Now in this case, if you see, the market is going sideways, so we have to see what was the initial momentum of the market. So it went high, right, and then slightly higher lows are being created. Overall bias is bullish. Now comes the candle part. So that's the earning day, and there is a volatile candle right there. So we mark the high and low of that particular candle and create a zone. The bias was bullish. If the stock now moves towards the downside, that means we are going to skip. If it moves towards the upside, the strategy is activated and we will be waiting for the retest to get a good risk reward ratio. So you guys can see there is a good candle right here, but as I told you, you need to wait for a green candle. So that is our green candle right there inside the retest area. So we'll go with that. We'll keep a stop loss just below that. It's looking like 2.5% or something. 1:2 risk reward ratio. There we go. Let's see. Our target gets completed in this one also. The same stock is only going to give you many opportunities because of the earnings day, right? So there are, again, the earnings are right there. This is the candle, a very good volatile candle. First, I'm going to mark the high and the low of this candle. Going to stretch this zone. Now, overall, if you see, the market went towards the upside, that means higher high, higher lows means a bullish bias. So the same logic, if the market starts moving towards the downside, I'm going to skip the trade. But if it starts moving towards the upside and closes on a daily time frame, then only I'll be interested on a retracement. So you guys can see the market starts falling towards the downside. I'm going to skip my trade. So here the markets are in a downtrend, bearish bias. We'll mark the earnings day candle high and low, and we will create a zone like this. The only thing that we don't want is a upside movement and close. So we want the markets to close on the downside, only then we'll be activated. And then on a retest, we can start selling. As you can see, the stock started moving towards the upside. We are just going to skip the trade. But see, I was really curious that if we would have entered here, what happened? So you can see nothing much happened. The stock went sideways and eventually the stock went towards the downside. So that is the whole point. Initial bias was towards the downside. And if after the news candle, the market starts moving towards the upside, it might just be a trap for you. So this way you can also save a lot of money by not trading, because not trading is also a form of trading. Earnings candle, mark the high and the top. Initial bias is higher high, higher lows, bullish in the market. So now what we want is an upside move, a significant upside movement, and then a retracement. You can see a lot of candles have been made there, but there is no significant upside movement here. The market is still sideways. So I will only consider it upside only when it moves away from this particular zone. So now I can say that the markets are moving away from this particular retracement zone. Now if it comes back to the zone, I am very happy to create a entry there. Okay, now this is a solid lower wick rejection candle, also telling that this zone is working amazingly. Now the second candle here is this green candle where our entry would be. Below this, I'll keep a stop loss. Let's play the 1:2. Let's see. So here we go. Candle, I've marked the high and the low. Initial bias of the market is creating similar highs but higher lows. So it went up and then created a kind of a descending triangle pattern. Now descending triangle means same high and higher lows. So it is not highly bullish but slightly bullish. So bias will be on the bullish side only. Now I want the market to move up, come back to the retracement zone. We'll take the entry there. That is exactly where I would like to enter, keep a stop loss below this wick, and would like to play for 1:2. Now here if you see, that is like a great 1:2, because there are a lot of confluences here. For example, our strategy is also applying. Also the supply demand zone is also working. The previous resistance, which after the breakout is acting as a support, and we are taking the trade around the support, around the new support, and playing for the recent supply filled with confluences. Such trades are known as A+ strategies. And by the way, if you want to learn my A+ strategy, you can send me a hi on this particular number. Initial bias bullish, looking the high and the low of the candle, stretching the zone. Now we want an upside movement and a retracement. Market started its journey from the downside only, so we are simply going to skip the trade. But for the sake of understanding, let's see what happened. See, nothing much happened. The stock literally went sideways. So that's the high and the low of the volatile news candle. Higher high, higher low, upside movement. Markets are bullish in nature. Currently, if you see, these are sideways candles. We want the candles to move away from the zone. And now we want a retracement. That's a good retracement candle right there. Like to enter at this candle, keep a stop loss just below that 2%, and we'll play the 1:2 risk reward ratio. So you guys can see right here, we are hitting our stop loss in this particular one. Moving to the next one. If you see, market consolidated at the top, falls towards the downside, the bias is bearish in nature. Now we mark the high and the low of this candle. Now what we want is the markets to close below this come back, retracement, and that's our trade basically. Okay, so the market is giving you a really good closing here. Now all we need is a good retracement at this area and a good candle in order to sell. Okay, so this is a really great case because the markets are not retracing back. They just gave a huge gap up above this particular zone. So what exactly happened here was a strong downside movement, then a news candle, and then it is moving towards the downside. That means on a retracement, it's a good activation of the strategy. But rather than retracing back, it is now completely changing its trend and moving above the zone. So we are simply going to skip the trade. Okay, so sometimes I'm seeing that there are no volatile candles, just a simple candle. Still, I'm going to mark the high and the low and going to mark the zone. The overall bias is bullish in nature. There is an upside momentum and now the market is retracing. That's good. You want a green candle at this area. That's a good green candle. I'm going to make my entry around that area and you will keep a stop loss below this. We'll go for 1:2, hitting our target in this one. Okay guys, thanks a lot for watching this particular video. I hope I was able to provide some value, strategy points, and some good educational content through my videos. If you really enjoyed this video, make sure you hit that subscribe button. Be the part of this family and hit that like button. We'll see you in the next one.